Hello, everyone. Welcome back to the fourth of our webinars today, or welcome if this is your first visit. We're going to be looking at the US markets, in particular stocks. I think David's going to look at the indices and possibly some commodities as well. But before we do, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Just before we pass over to David, I hadn't quite realized I had a few more minutes from the previous webinar. I pulled up this this free resource. It's called it's a little app called Credible, because they're obviously in earnings season at the moment, and it just lists all the upcoming earnings. I've got them all tagged here later on. It only does go to 10 o'clock, so Tesla is also reporting today, but it's actually at 10:30, and I think this clicks over at 10 o'clock. But there we are. You know, it's nice to have know what is going on. Yesterday, obviously, we had Microsoft, which seems to have given the markets you know, a bit of risk appetite, an injection of risk appetite today. Of course, the main news is that we have the Federal Reserve. Let's just have a quick look at the calendar, but I'm sure you know that all already. What are they doing? Let's see. Oh, that's the Dow, the futures come off a bit. They were looking very positive earlier on. Let's have a look at the NASDAQ. Let's have a look. Oh, that's still very positive. They a lot of it's probably down to and the S&P is still looking very positive. Well, as I said, Microsoft, they reported some nice figures, and they've been credited for dragging everyone up. But given their weightings in the three main indices, I'm really not surprised. Right, just pass over to David. The last thing a couple of things. We've made these shorter because it makes the video, the recordings shorter, and you know, you don't have to sit through you know, hours and hours of recording. If you weren't at the previous one, the recording will be up both on my channel and at quantumtrading.com YouTube channel. Talking about in the previous one that we are working on our stock program. There will be a sign-up form coming up for that fairly soon. So if you want to be kept updated of the launch date, there is an awful lot of material that we will be putting into the program, but you can sign up. All you'll get is the occasional email from us saying, you know, giving you a progress and an update, maybe a sneak peek into what we're doing, and then of course the actual date itself. Right, David, I think, has got in Ninja Trader, I think, and maybe Trading View. I will pass over to David, and I will catch you later.
Hi everybody, warm welcome back. Good to see you. Okay, funny enough, you're thinking, well, why am I looking at the multiple CSIs when I'm actually, you know, we're talking about stocks and everything else? So I wanted to pull this up and just show you what is going on in terms of the yen. I've also got it on TradingView as well, actually on the index. But the yen is the magenta, and you can see here this is on the faster time frames. This is 1, 3, 5, and 10 minutes, so pretty quick here. But you can see how oversold it was, and now it's rising pretty strongly. And if you're seeing yen buying coming into the market, then what is that telling you about risk? It's telling you at the moment that it's risk off, and that's why you're seeing what we're seeing. Now, if I go over onto the, in fact, before I do that, let's just flick over onto the indices themselves. There we go, get all three of them up there, just get an eyeball on what's going on. Before we do that, the first place to visit is obviously the VIX. This is the VIX. This is on 3 minute. This is on, sorry, I've got these on the same time frame. No, I'm sorry, 1 minute, 3 minute, 5 minute, and over on the daily. This was the volatility of the last 2 days. No great surprise. You know, the VIX actually shot up and then shot down again, really mirroring inversely what's been going on in terms of price action, where we saw these plunges and recoveries, plunging and recovering. And that, of course, is reflecting the VIX. And whatever you're doing, intraday trading, and it doesn't matter whether you're trading Forex, whatever you're trading, you need to have the VIX up, because the VIX is, as I said in the previous webinar, trading is about nothing more than sentiment. It is the flow of sentiment. It is the, you can think of it in any which way you like. The way I or the analogy I use is of a seesaw. And that's really all it is. It's a seesaw with a fulcrum, and you've got people who are constantly getting on and getting off the seesaw. Some are heavier, some are lighter. And it's that balance between bullish and bearish, risk on, risk off, and this is the flow. And that happens intraday, it happens minute by minute, second by second, it happens daily, weekly, whatever time frame you're in. That is all you're looking at. You're looking at the cross flows from risk on to risk off, from safe haven into higher risk assets and back. And the key is the Forex market, because the Forex market, if you think about it logically, how are you going to convert an asset? Well, you've got to convert to cash before you go into something else. So if you're selling commodities, or you're buying gold, or whatever it may be, at some point, or you're coming out of stocks and you're moving into bonds, at some point you've got to go into cash somehow or the other. And that is mirrored through the world of Forex, through currencies themselves. It is the exchange world, of but it's also the currency, the paper money flow, if you will, of the market. And it's interesting that on the Complete Forex Trading Program, which we put together 2-3 years ago, we now have an awful lot of stock traders, because stock traders and investors are starting to appreciate that by looking at the Forex market, they get a better understanding of what they're trying to do as a longer term investor, a longer term intraday trader. So I'll just put that on the table. This is the volatility index. It's the VIX. It's the one you've got to have up here. And what we've actually seen in the last sort of hour or half an hour, so maybe 3/4 of an hour, is obviously quite a sharp reversal. You can see it down here on the 5. Initially we had VIX moving lower, and now it's taken this turn to the upside. So it's basically reflecting the fact that what we're seeing on, certainly in terms of some of the indices, not all of them. Let me just pull up here we go. This is the indices themselves. So at the top left here, I've got the pound index, not particularly interested in that at the moment. This is the yen index, starting to see that buying on the yen index coming in here. This is the dollar index, starting to see a bit of cranking up in the dollar as well. And obviously, all of this is pre the FOMC, so expecting it to quieten down. That's the euro. We had a very strong rally, that's reversed as well. Just pop that out the way. Let's go back down onto the on NinjaTrader now on the dailies. So at the bottom here, we've got the YM, we've got the NQ, and we've got the ES over on the right-hand side. So those are the three principal ones. I haven't got the Russell up here, but the Russell is also a very important index as well. And understanding the structure and content of and how these indices are created, and their constituents, and the weighting of those constituents is absolutely key. And that is why, and we're going to cover that in the program in detail, it's a huge program we're putting together, but that is one of the reasons why over the years you will see quite big variations in terms of market behavior between particularly these three indices, where you might expect them, well, you can say, well, they're all risk on or risk off. Why don't they move at the same pace or in the same way on the day? They don't. And there are many reasons for that, not least the markets that they are primarily constituted around, and also the number of constituents they have, and whether those constituents have a big weighting or not. And hence you see things like the NASDAQ, for example, leading the way when maybe the other two indices are lagging or even reverse. You'll see up days in one and reversals in another. You'll see that all the time. We've seen that many, many times over the last 3, 4, 5 years. So let's just pull the YM up. This is on the daily, and the top line was the 5 minutes. We had these massive plunges. Now, I said this morning in one of the other, I think it was in one of the Forex webinars, or this afternoon rally for us, one of the Forex webinars, that the actual volume under here, I don't think, is in line with the price action. This was a massive move. You're talking hundreds of points here, and yet if you look at the volume, is the volume, in fact, I'm just going to pull this back a little bit, see if I can find anything bigger. Nothing particularly there. Does this volume look in line with this dramatic move? The bottom of the wick is down here, it's down at 33,000 somewhere. So it's almost 1,000 pips, if not more. And you think, is this actually in line? Is this genuine? And looking at it from just without any knowledge of trading, if you looked at it in that perspective and thought, well, do you know what? For this sort of extreme move, this doesn't look extreme volume, even against its next door neighbor. And you've got a similar effect the following day, yesterday. And you look at this again, very dramatic move, huge volatility, a massive reversal, and yet look at the amount of volume that is beneath it. You know, this doesn't represent heavy selling. It certainly doesn't represent heavy buying. So it's no great surprise to see at the moment the YM, we've hit some resistance up here. Obviously, we've got the FOMC later on, so you know, all things could change at that point, but what we're seeing at the moment is we're seeing this come off. We've got quite a big wick to the upper body here. The point I'm making is this, that whatever you look at, it is through the context of volume, and whether, as Wyckoff, one of Wyckoff's rules states that, you know, effort and result have got to be in agreement. In other words, what you're seeing in terms of the volume has got to align with the price action that is associated with it. Now, it doesn't automatically mean that the two are going to be in agreement or disagreement. It also doesn't mean that the volume that you might see on an extreme move is very low, because what happens in these situations, and it's no great surprise ahead of a big release, is you have the market makers who are likely to play games, and you see this all the time. So if you've got an extreme move on low volume, or volume that doesn't really align, then you've got to ask yourself, and I know it sounds cynical, and it's not a case of you know, being cynical about trading. It's just looking at it through the perspective of a market maker's eyes. If you were a market maker on the inside and you had the opportunity to make money, how would you do it? And would you do these things? Of course you would. It's like the crossovers at the you know, London session. When we have the crossovers, you get a move higher, and then you get an instant reversal. Maybe it's on low volume, or you get a snap move on low volume, and the market collapses or goes the other way. Whatever it does, but the volume is not there to support it. Those are the sorts of things that the market makers will do, and you know, it's a fact of life. It's a reality of life. It's a reality of trading. You just have to accept it and just view it through the prism of volume, which will reveal the truth behind the price action, whether it's true or false, whether it's a fake out, whether the market makers are actually participating full time or not. And it will simply tell you all of that. And all I'm saying is that these look suspicious to me, because this volume under here doesn't look as extreme as it should be. Just drop that one out of the way. We had exactly the same on the NQ. Certainly yesterday wasn't quite the same as the YM, but certainly we had the extreme view there. And again, if you look at the volume there, just pull over, see if we've got any higher volume over here. No, we haven't. But it certainly doesn't look, if you were seeing that sort of move as a traditional hammer candle, for example, then you would expect the market to ping higher into congestion, probably move higher, but you'd certainly see a lot more buying, and you're not seeing it under here either, although that is a less dramatic candle than was on the YM. And we've got the same here. In terms of what's going on intraday perspective, it's no great surprise that we're seeing a lot of up-down movement at the moment. Let's just go onto the multiple time frames, pick up some of the stuff there. This is, I've got the NQ here, so we're on the NQ. We've got 15-second here, we've got 1 minute, we've got 3 minute, we've got 5 minute, 10 minute, and out onto the 15 minute here. And if you're going to trade anything right now with, what, 3 hours left, as an intraday perspective, you've got to be light on your feet, and you know, it's very much a case of moving down to the faster time frames. If you want to trade and you're trading in congestion, fine, you can do it, but you've got to be an awful lot quicker, and you've got to go down to a faster time frame. You cannot trade a congestion phase on a slower time frame. So if you're going to trade, you've got to come down to, I'm not suggesting you come down to 15-second, but you might have to come down to a minute, probably 2 minutes. I wouldn't trade anything less than 2 minutes in congestion phase, or anything slower than 2 minutes in congestion phase, rather. Yeah, other than that, the principles are exactly the same. What have we got? We were down the VPOC. We had a snap move. We had volatility coming in, decent volume under that. So, you know, that was fine. What are we expecting with the volatility trigger? We're expecting some sideways, which is what we've got. We're pushing higher. We're up into, we've got a reasonable amount of volume here. We're moving into that volume node, and it's a question of just reading it candle by candle, volume by volume, and just deciding, you know, are you going to take a trade here, or you're not going to take a trade here. It's purely your decision. If you're going to trade ahead of a big news release like this, expect the markets to congest. It's what we're seeing right now. It's no great surprise, and they will quieten down. And if you go down onto the slower time frames, go down to a 5 minute, it's not something I particularly would want to trade at this stage. And everything else works in the same way. You've got the volume point of control here at 5, so it looks as though we're going to come back up here. We've broken through this little what was resistance. What will the market do at the 5 minute time on the 5 minute time frame? Almost certainly congest here. We've got a strong area. Just move the chat box out of the way. Oops, get that out of the way. We've got a very deep resistance area here at 440. So that is on the accumulation distribution indicator. And the beauty of the indicator is it actually presents these lines for you automatically. It thickens them. It's like Popeye and his spinach. The more he eats, the thicker the bigger his muscles get. It's exactly the same with the accumulation distribution indicator. Every time this level is tested and holds, then it will thicken accordingly, and it just presents this visual picture. So you've got minor levels all the way down here. This was a reasonable level. Looks as though it's going to be breached. You've got the VPOC here, and then you've got this very strong level of resistance. So if you're going to trade this to the upside right now, the 5 minute chart is telling you it's going to run into resistance at the 400 level. So if you're up here on 15 second, you want to know that. When it gets to this level, then the chances are it's going to capitulate, as it has done here a little bit. So all it comes down to is trading multiple timeframes all the time and just being aware of what is going on across your time horizon, whatever it is you're trying to do. You've got the indicators on here, you've got the trend monitor, it's turning a little bit bullish here. We've had bullish sentiment here. Now it's being rippled through into the 1 minute. Hasn't changed here. You wouldn't expect it to on 3 minute. Again, we're running up into the volume point of control. So, this is not going to go very far. It's just going to go up here into the VPOC here. We're running into the VPOC. We've got VPOC everywhere down to the 15 minute. We're trading at the volume point of control. Where are we going to be trading? Sideways, simple as that, nothing else. Let's go and have a look at oil. Very bullish on oil. We did a post on that. I can't remember, I think it was back end of last week maybe. Where are we? Wednesday, possibly. Yeah, I think it was back end of last week. Very bullish on oil. We've been saying that oil is going to go up to $90. If we go on to, I think it was the monthly. Get that loaded up. There we go. Yeah, it was basically breaking through this level here. In fact, let's go back to the weekly. I think they had the other levels on it. There we go. Getting up to this top level here, getting up through 90, on higher, and possibly on through to even up to triple figures. And given the situation that's going on globally, certainly as far as Russia is concerned, then that is going to exacerbate the situation. And again, that will have an impact in terms of risk. Markets don't like events like that, global events, which will have an impact at some point. And again, we've seen this so many times before. Remember, the market makers use news. They use news to frighten the market and then reverse. And you'll see it all the time with global events such as that. Market cut, something happens, bang, down it goes, and it recovers in the afternoon, or wherever it is, comes out overnight on Globex, because these markets trade 24/7, and you see that reversal, and then it'll reverse sharply the other way. And you see it all the time. It's just a money-making exercise for the market makers. Sorry if you don't want to hear that, but that's the nature of the business we're in. So very bullish on oil. Looking for that to go up to $90 and beyond. Let's have a quick look at gold. Gold is still in this really difficult phase. We had the breakout through here, through this level. Right about at the time, we're looking for it to get up to 1880. It's been selling off today. The relationship between gold and inflation I wouldn't say it's broken down, but it's certainly not as strong as it used to be. With the amount of inflation that we've got coming into the markets, with now, central banks around the world talking about putting interest rates up, inflation, then gold should ideally be a beneficiary of that, and we should see gold prices rising. They are limping higher at the moment. They're certainly not rampaging higher. And if we get up to 1870 or 1880, we could even see the same sort of reversal point that took place back end of last year. where it looks as though it's going to break through into 1900 and go beyond the all-time high and all the rest of it. When it didn't, it just feeble broke back and reversed lower, and we're seeing that again today. Am I a gold bucket heart? I suppose, yeah. I mean, I'm like most people, I guess. You know, it's nice to see gold going up because it's a precious metal and et cetera, et cetera. But then, you know, given what's on the chart, I'll just trade on the chart intraday. I'm only looking for what's going on intraday in terms of whether it's going higher or lower. Longer term, hopefully it will go up, but if it doesn't, so what? And the other point also is, as many as you know, I have a bias to the short side. I love trading short because markets move much more rapidly to the downside than they ever do to the upside. So if you get it right on the downside, you make money an awful lot quicker. So it's pretty bearish at the moment. You can see here the trend monitor, bright red on 15-second, rotated throughout to bright red on 1, holding on bright red on 3, had a minor hiccup there on the 5-minute as we had this little rally. And that's the beauty of the trend monitor. It's been designed to help you with one of the hardest things to do in trading, which is to hold in a trend. Once you've got a position in the market, you've got some profit in the bank and you've banked it mentally, and then the market starts reversing against you, and your panic reaction is to close out and get out the trade. And that's what the trend monitor has been designed to do. It's designed to smooth that out, to just change a color and say, yeah, okay, I can see this is changing, but is it actually changing into a full-blown change in trend? In other words, reversal back to bullish. Out we come the other side, and it just gives you that confidence. VPA also gives you that confidence when you're reading it. It just helps to tell you whether you're seeing, for example, in this little rally here, what am I looking at? It's distorted by the fact that we've got this big volume bar here under the volatility candle, but nevertheless, you know, this gives you a clue as to what is going on. We've got falling volume and we've got rising price. What is that telling you? It's telling you this is a weak rally. If it were reversed, in other words, if this were going up and this were going up with it, that is a strong signal that the market is actually reversed. We've seen maybe some strong buying coming in prior to that, and we're starting to see a strong reversal. What that is telling you is it's telling you, hang on a minute, this is not a strong reversal because the buying interest is falling. You're seeing the market trying to rally, but you're seeing the buying interest falling away. Then we get this candle here, up thrust candle, although it's not at the top, it's not at the bottom, but it's nevertheless a sign of weakness. The market is trying to rally and it's being overcome with selling. You've got decent volume under there, so it's telling you this, yeah, it's just confirming what you've seen here. This is weak, it's not looking great. Then what do you get? You get this wide candle. What do you get under it? You get really, really average looking volume. Is that a sign of strength? And it comes back to what I was saying just now about price and volume being in agreement. This looks anomalous. It doesn't quite look right because it doesn't look as though there's sufficient volume. I appreciate this is all being distorted by this candle, but when you look at it in the context of maybe these candles over here, you know, this has gone maybe twice the distance that this one went. So not quite twice, but it's certainly gone a long way, and you think this doesn't look right. You know, there isn't enough volume under this to sustain it. Now, when you get the reversal coming, what you want to see is rising volume. You're seeing it a bit, but it's not terribly strong. But nevertheless, it's gone down to the volume point of control. And as you're coming down here, you know, the next question you want answered is, are we going to go straight through here? Are we going to fall, you know, with a nice, wonderful price waterfall as we had here? And the answer is no, because you've got the volume point of control here. So you're expecting the market to congest at that point. You know, it's all about anticipation. It's all about expectation. It's about using the indicators and your knowledge of VPA and putting it all together in that way. So that's where we are in gold. Let's go and have a quick look and see what's going on in terms of back where we were. See if we've actually gone anywhere or not. No, just sort of oscillating around. Volume point of control here. Minor move there. We're at the VPOC, we're at the VPOC, we're at the VPOC. No great surprise given what's going on 3 hours later or 3 hours hence. And that's where we are in terms of the indices. The yen, as you has rolled over a little bit now. So we've had this rally, now it's going the other way. And let's just have a look at the VIX. Let's see what that's doing. Sorry, there we go. This is what the VIX is doing. So the VIX has come off as well. You know, we've had that strong move. Now it's rolling over again. Lots of congestion going on. So it's a question of waiting, being patient, sitting on your hands. If you're nervous about trading such markets and you don't want to scalp literally on the 15-second, 30-second, or 1 minute, don't, stay out and wait. Let's just have a quick look and see what is going on Tesla, because I've got that on another Workspace, there we go. This is Tesla. There's always something going on in Tesla. And this was in fact, I think we wrote about Tesla on Monday. Decent buying under Tesla on Monday. That really reflected what was going on the major indices with the reversal and the pullback. So nice wick to the lower body, decent volume under that. You're expecting some sort of recovery, which we've got, and we've had a gapped up open today. So we're back at 950. And in terms of where that potentially could go, it's still looking relatively weak. It's not looking terribly strong. You can see the trend monitor down here is bright red. So it's not looking terribly strong at the moment. And we've been writing about this for some time. Potentially, if it's going to rally, fine, it'll rally back to 1050, then it'll sit there, the congestion phase of the VPOC, and ultimately, is it going to go through 1250? Possibly at some longer date point, but at the moment it's really in congestion phase. And the big issue with Tesla right now is, if it does break and hold below this level, there's very little in the way. You've got a low volume area right the way down to 800 and below on the VPOC. So there's very little in the way of volume price support, a volume-based support, or in terms of price-based support. You've got a level here which was breached yesterday, and you've got another one right the way down here. So potentially we could see Tesla go all the way down to 770, 780, something like that. So there we go. I'm going to wrap up and run very quickly. Let's just, oops, pop that out the way. There we go. Just point you where all the bits and pieces are. You'll find all the indicators that we've talked about in the last few webinars today over at quantumtrading.com. They're all there for these platforms: MT45, NinjaTrader 7.8, TradingView, and TradeStation. We are currently working on NinjaTrader very heavily. We are porting all the indicators over into Market Analyzer in the same way that they are on TradeStation and also in TradingView. So you will have the indicators there. If you've got the full package of NinjaTrader, as we always do, you will get those free of charge. It's just our way of saying thank you. So if you have a full package or invest in a full package in the future, you will always get whatever indicators we develop free of charge as a thank you from us. In addition, can I also say, and I always forget to say this, if you've bought one indicator or a group of indicators, it doesn't matter whether you bought them in the last 10 years ago, we will have them on the system. And if you want to upgrade to something, if you want to buy a full package, or you want to upgrade to the education program, or in due course you want to upgrade to the stock trading program, you will always get a credit for what you've spent with us. It's just the way we work, as simple as that. That's where you'll find Anna, annacooling.com. All the books there up on Amazon in both Kindle and in paperback format. And there are some wonderful reviews up there, which are very humbling, I have to say, from all levels of traders who find it not only in becoming customers of ours or in joining the programs or whatever they do, but also in helping them just using VPA. Maybe they've been using something like Elliott Wave and struggling. And what VPA does, what volume price analysis, it just fills in that gap in their knowledge. And it's extraordinary how many traders have said that. So it's very humbling to see all those comments up there. And finally, this is the Forex program. I mentioned it earlier. You'll find it at quantumtradingeducation.com. We bolted in the funded program. You're trading our money, not yours. And we've also added another level in that, where originally it was only Forex you could trade. Well, once you get to the next level up, which is the portfolio managers level, I'll just click on that page and show you if I can very quickly. We've got so much stuff going on here. Down to the bottom here. These are the levels you start at. You choose 5,000, 10,000 or 15,000 account. Once you've passed through that level and got up to the next level, this is where you'll come to the portfolio manager level, and we've got the you can trade the indices and also gold on that level. So at the evaluation stage, it's only spot Forex, but once you get up to that, the next level and beyond, you can trade those markets in addition. As I say, it's all our money, not yours, so there's no risk. The only risk to you is, or your entry level ticket, if you will, is the cost of entry. And then once you've paid that, that's it. You can't lose any more. It's a great program. We got a lot of students on that. And the reason we put it in was to give our students the opportunity to leverage their knowledge from the program. And we'll see if we can do something. It's very unusual, but we're going to see if we can do something for the stock trading program as an equivalent, but we don't know whether we can do that yet or not. So watch this space. As Anna said, if you are interested in the stock trading program, which will both be investing and day trading, I wouldn't say comprehensive, it doesn't do it justice. It will be huge. It'll be like the Forex program. It's all being written at the moment, heavily into stock options at the moment. And as I say, it will both be from a day trading perspective, but also from an investment perspective as well. So thanks very much indeed for joining us today. We will see you again soon. Just see if there are any questions or not. Let's have a quick look. No, we're okay, good. Thank you very much indeed for coming along today. Hope you've enjoyed it. We will be back next week with similar sort of format. So enjoy the rest of the trading day. Be interesting to see what happens with the FOMC tonight, as always. And we will see you next week. Enjoy your trading. Stay safe. See you soon. And bye for now.